Good morning, everybody. Good evening, good day, wherever you may be. Hope all is well. But as always, it is a pleasure to be here live with you. So I do welcome everyone into the action today. My goal is to set you guys up for the trading day with stocks. We'll look at a little crypto. We'll look at some commodities. We'll see what earnings are coming out or what earnings have come out here over the last 24 hours and look to ultimately take advantage of some setups and some trades. All right. So the bottom line is that's where we are at today. Thank you all for coming out and enjoying it with me and looking at charts as we get going. Don't forget, make sure to follow me on YouTube. I will be doing pop-up lives randomly when there's big events, so you will get notified. So again, follow me on YouTube, like it, whatever you got to do to make sure that you get notified when I'm going live with some big trade setups or ideas. All right. First off, let's go into some earnings. So there is one stock making a big move today. It is Lyft. Lyft absolutely missing earnings in a major way. So let's go ahead and take a look at the chart. All right, so this is your Lyft chart prior to the earnings. I'm going to flip over to the 10-minute chart and look at this collapse yesterday in the after hours and this morning, right? So we have Lyft trading down at $11.16. So the question here is, well, where do we look for technical support? Where do we find technical support? To do that, we have to go back to the daily chart, okay? So when we go back to the daily chart, please note that you don't have the downside action because you haven't had the stock market open yet. But right off the bat, there's a very clear double bottom here at $9.75. So basically what this tells me is that if Lyft gets down to $9.75, now remember, it's already near 11 bucks. So it very easily could flush to 975. That will be a day trading opportunity. Now, again, is it a swing trade? You might get some sort of technical bounce, but again, this to me would look to me as a day tradable opportunity more so than a swing trade, mainly because you're going to have a lot of funds over the next couple of days unloading shares, and it could just drift lower following the potential technical bounce on an intraday basis. So once again, guys, 975 is a level to watch on Lyft. Couple other things let's go over. Let's go right over to the dollar. What's the dollar doing? Now, remember, the dollar is absolutely a inverse indicator for the markets and for risk assets. Now, again, can anyone tell me what pattern formation this is right here? What pattern formation is that, guys? Come on. I know someone knows it out there. Someone take a stab. All right. Well, anyways, I know a bunch of you guys know it, but bottom line is this is a bull flag formation on the dollar. The US dollar, again, is putting in a bullish consolidation pattern. There you go. I see a bunch of you guys typing in flag pattern. That's exactly correct. So what can we extrapolate from this setup? What's the probabilities? And remember, everything technical that I do is all about probabilities. So ultimately what this means is whether or not the dollar goes up today or next week, this is telling us probabilities are the dollar is going to start to move higher. What does that mean for risk assets? Should we expect upside in the market or downside? And the answer is downside. In the crypto markets, would we likely see more downside? The answer is yes as well. If the dollar is moving higher, we likely will see downside in risk assets. All right, where would the dollar go in terms of a short-term target if this bull flag does start to play out? The answer is pretty easy here, right? So you have this little area right here. And again, this would be my target on the dollar. This is where I would consider buying Bitcoin again for a quick trade, or I would consider buying some stocks or the S&P or the NASDAQ. Look at this pivot low right here. Let me zoom in a little bit. This pivot low with this pivot low, with this high, with this high. See how it all aligns? That tells you there is a major level there as that's going to be resistance. It's a former level that was huge. We've been away from it for a little time. So if the dollar rallies up, 105.50 essentially is going to be big resistance. Okay. So that's very, very important. The other thing that you can do in addition, just to see, and again, it doesn't necessarily change the level, but it might confirm the level, do a Fibonacci retrace. Okay. And interestingly enough, right around that 105.50 to 106 level is also the 382 Fibonacci retrace. So again, I like using fibs when we have sharp moves to the downside and we're getting bounces, because again, it gives us a general sense. What I'm looking for here is a confluence of levels, right? Two levels that coincide Therefore, they're going to be stronger. So right away, having the fib 382 around 106 with 105 as the resistant 105.50, that's giving me a 50-cent range where, again, and there we go, a 50-cent range where we can look for major resistance in the chart of the dollar. All right. So again, the dollar tells us a lot. Remember, if the dollar is going up, you have to assume markets are going to go down. If the dollar goes down, assume markets are getting a bounce. Okay. So very good on that one, guys. Love seeing that so many of you guys understand the bull flag formation. It is a very powerful formation, and it's something that occurs very, very often in charts. All right, the next chart I want to go to, let's take a look at the dollar, the gold chart here. Let's go here, guys, and take a look at that. And right off the bat, what do we see with what kind of pattern is this? All right, let me zoom in. That's a bearish inside bar consolidation pattern, right? All right, so ultimately, what we're going to look for here is the potential for downside to continue on the gold chart. All right. So again, you guys know I was a huge bull in 2022 and early 2023. I unloaded my gold longs right up in this higher range as we were coming into resistance. Now I'm looking to rebuy right in this 1800 level. All right. 1800 level is going to be key support. All right. That is going to be my first level. Now, again, think about this, right? Am I going to look to buy everything at once on gold when it hits that level, or will I inch into the position? And the answer is I'll inch in. Why? Well, because it could pierce that level and it could go here, right? There's a little bit of support right here. So you want to buy in tranches, essentially in segments, because that'll give you your best dollar cost average. Okay? All right. So again, the general expectation. Now the question, here's another quiz question. And I love giving you guys quizzes because so many of you guys know this stuff. But if the dollar is showing us upside with a bull flag, does it make sense that the gold chart should be showing us bearish consolidation, potentially with a down move? And the answer, of course, is heck yeah. That makes perfect sense. So the key is, and this goes for a lot of newbies out there. And again, I know we have a lot of new people that are watching me, a lot of people that have watched me for years. And the key is that charts should make sense. All right. Now, again, do they always absolutely 100% follow what they should do based on probabilities? The answer is no, because probabilities, you're never going to get to 100%. But the key is that it gives us the ability to be the casino, not the gambler. Always remember that. Casino, not the gambler. So sure, we're going to lose. A couple gamblers come into our casino. They take us for a bunch of money. But in general, when we have 1,000 gamblers, we're going to make money. When we have 100 trades, we're going to make money over a majority of them. And that is the key to proper trading and proper mentality, right? All right, so let's go on to another chart. I see a question there about natural gas. That was on my list as well. Someone was asking specifically about UNG, but just keep in mind UNG is a tracking ETF for natural gas. So what we want to do is look at natural gas here itself, and that basically will tell us everything we need to know. So natural gas has a trend line that I'm watching for a break on. You can see it goes back to the beginning of January 9th, connects right through the high of January 24th, and right through this high reversal here. After the 2 days up, we had a reversal candle a couple days ago. It was right that high. And again, I know it's hard to see on my charts. I apologize. I can't zoom in even more, but there we go. All right, so there's a little tail right there. Okay, so basically what I'm looking for is a break above that trend line. If we get a break above that trend line, there's really no major resistance on natural gas until probably close to $3. And the big retrace would be $3.50. So again, you're at 247 right now. And again, you haven't broken out yet. I want to be clear on that. You know, you're trying. You can see the chart hitting the line, then pulling back. But you have to get a break above. I want to see a daily close above this line. Obviously, for those of you that know confirmation, that would be very, very important as well. We get that, it can start to rally sharply. And I think to be honest, what I'm seeing on an intraday basis, and we've even seen it this morning, right, is that yesterday we had these great pops, and then there's an institution or there's institutions that are in forced liquidation that are having to unload because they probably got in at some ridiculous level on natural gas. And you can see these selling. And look here, yesterday we were soaring, and then look at all the selling that came in. That's not normal selling. That's institutional. Someone got over leveraged. They're being forced to liquidate. So also one of the things I'm watching for is for that to stop. I think the confluence of that stopping with a breakout creates a massive short squeeze in natural gas. There's a ton of shorts now in natural gas. Look for that short squeeze. Again, you have to break this down sloping trend line to the upside and again, confirm above that. So that's going to be one of those things that we really, really watch. All right, when it comes to BOIL, remember BOIL is just a 2 times ETF of UNG. UNG is a tracking ETF for natural gas. So again, basically what I always say to people, folks, is always look at the single, the commodity. If you're trading an ETF based off a commodity, look at the commodity chart. It's going to be most accurate. And then also if you're looking at a S&P ETF, don't look and analyze a double or triple of that. Analyze the single or the S&P itself. It's going to give you the best technical analysis. Okay, a couple other charts on my radar here this morning, guys. Let's get right into them. Number one, Tesla. We got to look at Tesla here, guys. Tesla looks like it may have topped. Look at that tail yesterday. And again, part of that was the market sell, but look at the extension move. Tesla went up a full 100% off of its lows. The most important thing is this level here, guys, all right? Let me use an arrow here. So see this low here, this low right here, that low there, and that low there. Notice how price went back to that. That's called a scene of the crime retrace. Okay, basically what I mean by that when I use the term scene of the crime is that when you break below support, when this was major support, this is the scene, right? And a crime happens. The crime is the breakdown of the trend line when it breaks below. So when you return to the scene of the crime, you're returning to that level. All right. And that again is going to be major resistance. All right. Again, for me, when I see the euphoria in stocks like Tesla, it's very reminiscent of 2021. Remember, the time of 2021 was a unique time in history. Interest rates were zero. The Fed was printing money. The government was sending checks to most U.S. citizens. People were staying home. So to see a technical bounce like this, and by the way, this goes for Bitcoin too, of why I'm so skeptical about the move on Bitcoin to the upside and why I very blatantly came out on all my interviews and said, guys, I don't believe this for 1 second, that this is a new bull market, is that we now have no printing of money. We have 5% interest rates. The government's not sending us any checks. And people are now having to drive back to work. The people are now going back to work. So all of these factors are so much different than what we had back in 2021. You have to take that with a grain. So essentially rallies you have to take with a grain of salt. So again, I look at that and I do think that it probably is in a position to fail these rallies. Now, if we look at Bitcoin, again, for those of you that are members of VerifiedInvestingCrypto.com, I talked about this. I said, guys, this is a topping tail here. Topping tail is a specific candle formation that probabilities, again, probabilities are everything. Probabilities dictated that when you get a topping tail and it fits the criteria, that now you have a top in the chart. I said that on that day. Since then, we had 1, 2, 3, 4 down days, 1 bounce, another down day, and a big fall. We broke this level here. The reason why that's so important is because you now have a negation of any bullish consolidation. This was bullish consolidation even with the topping tail. It was sideways chop. You've now broken below the low of that bullish consolidation. Now, you will have support on Bitcoin right here. This is your FTX beginning drop over here. So if I zoom out, FTX news came out here. It fell. We hit it right here. You can see how it pulled back and then broke out. This will now be a scene of the crime support. If that breaks, and by the way, that's around 21,300. If that breaks, there's no support until 18,400. Okay. Now on the upside, let's take both sides. A good trader looks at both the positives and the negatives, the upside and the downside. If we ever close above that topping tail high, all right, let me repeat that. If we ever close above that topping tail high, that is a negation of the bearish topping tail. You should expect price to go up to at least 25,000, potentially close to 30,000. All right. Now, again, that's a big if. When does that happen? I mean, eventually it'll happen in the next bull cycle, whenever that is. But that's what I would watch for on the other side. Okay. So that gives you a good sense on that chart that I wanted to go over. All right. We went over gold. We went over NVIDIA. Google. We got to look at Google here, guys. Google's on my radar this morning. If I flip to the 10-minute, the chart has actually turned green. It was lower earlier, which is a shame because I was actually looking to be a buyer this morning of this. Look at this trend line retrace yesterday. Trend line here today. So yesterday we hit that and it was a good bounce. Today, if we do fall down, this is your level right here. There's a gap fill at around $93. If we get to 93, I will be buying it most likely as a day trade, maybe even a swing trade. This is a big move for Google, by the way. You went all the way from 108 down to basically the 93s yesterday in a couple days. That's a huge move. So again, gap fill, huge support right there. That's what I'm going to be looking at in terms of an opportunity. Okay. Let me just go over of any other charts that I have. NVIDIA, I think NVIDIA likely has topped as well. And again, NVIDIA here on the 10-minute chart is already down a little bit, although only down about $4, but it was down 6 or so. It is coming back to the upside a little bit here, so we'll keep an eye on that. But NVIDIA, to me, is now becoming more of a short-term swing trade short versus a long. I just want to show you guys this trend line here, okay? You could make a case that you're right into this. Pivot low right to here, right through this low, and then look at the high yesterday, right around 231, really, to be honest. I think it only hit like 230 yesterday or close to 230. But that, to me, tells me we should have a pullback. Now, on a pullback, where would you go? Well, let's look at the scene of the crime. Here's an inverse head and shoulders. Shoulder, head, shoulder. Breakout, resistance. Where does it retrace to? And again, guys, this is why I love technical trading, because it makes sense of charts. It freaking makes sense of charts. And that is so powerful. When you're in a world of uncertainty, when people are like, oh, it's a Bitcoin new bull market. Oh, no, it's a bear market. Oh, no, who the heck knows? Charts, they're not perfect. No one's ever going to claim, or at least no one should claim that they are, but they give you an edge. And in this game, any edge means profits and financial independence. Okay. So again, that's something I'll watch for if we do start to pull back on that one. All right. So guys, good stuff here as we continue. I'll do a couple more charts. I am seeing a chart on ETH being asked about. Let's take a look at ETH. I know you guys love your ETH. Look at this, guys. This is not good news for Ethereum. Ethereum had this channel that I've talked about in my daily crypto videos that are on verifiedinvestingcrypto.com. Look at the break below the line. You closed below. Now, you haven't confirmed, so there is a small, albeit small, chance it can get back above that line. If it doesn't and it confirms, you'll have minor support at 1,500, and then there's no support until 1,325. Okay? So that's kind of, it's definitely like it's borderline breakdown here. I wouldn't classify this as a full-fledged breakdown because it hasn't confirmed the break yet, but it is like it's hanging on by a nail, like one finger's on the cliff and it's hanging over the cliff at this point. All right. So again, makes sense. If Tesla's going to pull back, if Nvidia, those are risky risk assets, it makes sense that crypto could be in trouble. Does it also make sense that if the dollar is making a bull flag and it breaks up, that we could also see crypto fall in this chart? Yes, it does. It all should align, right? And again, it doesn't mean it's always going to work out perfectly. We never invest 100% of our assets into anything because any one of my trades could be wrong. Trust me, I've been wrong before. I'll be wrong again. But by diversifying out amongst multiple different trading opportunities, we limit our risk. And then again, if you're going to bat, let's say in general, I bet 70 to 80%. So 70 to 80% of all my trades are successful, right? That's generally what my history has shown. What that means still is that 2 to 3 out of every 10 are going to be wrong. So I can't bet the farm on one trade because what if that's one of the 2 or 3 that's going to be a bust? So what I do is I spread my money out amongst those, knowing that the overall win rate will be there by using technical analysis. And that then gives me an overall net positive gain in my portfolio. And it sure adds up fast. Ask anyone that's a member of InTheMoneyStocks.com, VerifiedInvestingCrypto.com, or anyone who's taken the Verified Investing Education, the Winning Trader Series, will blow your mind, change you forever. All right, guys. So again, good stuff on that. Quickly, we'll go to Amazon chart real quick. I saw a question about that. Amazon hit support yesterday. Notice this level right here. Again, you could even argue that it violated it a little bit, but it's right in that range. If it continues down, eventually, I actually think it's going to go all the way down and actually make a double bottom or a lower low. Now, I wouldn't short this. You would never short this because you're chasing at this point. But what I would do is I'd be a buyer at a retrace to the scene of the crime. You have a classic double bottom right here as well. If I put my chart on this, we can draw a trend line right at this. And if price were to come down and intersect those 2 points, 2 factors right there, boom, 2 factors that are absolutely awesome. Okay. So again, very cool stuff there. Coinbase, yeah, sure. I'll go over Coinbase. Coinbase has had a dramatic fall yesterday. Please note how we had lots of resistance right up here. This was telling us that Coinbase was a short. In fact, in verified investing alerts at inthemoneystocks.com, I shorted this. Okay, now did I get the exact high? Nope. But did I get close to the high? Was I able to add to my position? Yes. And what did we do yesterday? We closed it out for a huge gain. As it comes down, where's your support level on Coinbase today? Right around $55 to $56. See that sideways chop right there? That's going to give you a support level. So if you get there, again, do I think that's the low on Coinbase? No, it's probably eventually going to go lower, but that's a technical bounce level. Okay, that is a technical bounce level. So again, most of what I'm covering in here, please understand, in fact, this is a good disclosure to make. Everything that I've talked about today is based on a swing trade, not a long-term investment. All right. Most stocks, I believe, are going much, much lower. In fact, every stock, I would say, if what happens that I think is going to happen, you're going to see the markets go down another 25 to 30% on the S&P, probably be down north of 50% from the all-time highs. Same thing with the NASDAQ. Crypto, I still have a target, 12 to 13,000, potentially 9,000. So again, when I'm saying buy or retrace to the scene of the crime, it means I'm going to be looking to get in there, and then within a few days or a week, I'm out with 10% profit, and I look to rinse and repeat. And I just do that over and over again. This is why I can make money in bear markets and bull markets, is because I just can read the charts. We'll play it long when it tells us to go long. We'll play it short when it tells us to go short. That's the beauty of it. All right, last chart I'm going to go over is the S&P 500. S&P 500, we'll look at this. We did have a breakout above this scene of the crime here. So what does this mean? If we were to pull back to this level, what is that telling us? This should be a bounce. Would it be a long-term investment? Nope, not according to what I just said over the, about markets going down. But could we get a little trade here? Absolutely. And then honestly, I would probably look for it to go and break lower. Eventually, it's going much, much lower on the S&P, but this would be a trade right around 393, 392 on the spiders if we got down there based on this classic retrace, again, to the scene of the crime. All right. On that note, guys, I'm going to finish up today. As always, it is a freaking pleasure to do these with you. I love them. It gets me psyched for the day. It gets me pumped. I hope it gets you guys pumped, gives you some ideas, gives you some education, all of that wonderful stuff. And again, guys, I will continue to do these a couple times a week. Come back, join me, tell your friends. I want like 10,000 people watching these live and then hundreds of thousands of views after the fact. Tons of knowledge in here. Thank you guys from the bottom of my heart for coming out. I will talk to you soon. Take care.